Hello, this is Kirk Johnson with People's Mortgage. In this video, we're going to talk about understanding closing costs. So what are closing costs? Closing costs are the costs associated with getting a mortgage, and they do vary from state to state. Some states are much more expensive, sometimes twice as much expensive as other states. Most costs involved that are associated with a mortgage are really flow-through costs, except for lender's costs, and we're going to go through an example of that in just a little bit. So for this example, we're going to use a mortgage here in Colorado, $150,000 loan with People's Mortgage, and this is for illustration purposes only. Let's talk about origination fee or discount points. Some lenders use them basically the same. Most lenders these days are calling it discount points for tax reasons and changes in guideline reasons. But basically they're the same if you see origination or discount points. What they're used for is to lower your interest rate. You can go with a 0% loan, zero origination fee or zero discount points, but your interest rate is going to be slightly higher. So 1 point equals 1% of the loan amount. So in this example, on a $150,000 loan, the origination fee or discount point is going to be $1,500. Now again, you can go with 0 points. You're going to have a little bit higher rate. If you want to go with more points, you can buy down your rate. Now lender's fees, these can vary dramatically from lender to lender, and these are the fees for People's Mortgage. We charge a processing fee of $150, underwriting fee of $300, and doc prep fee of $300. And these fees in the industry are very low compared to most lenders. I've seen lenders that their fees are twice as much, sometimes even higher than these fees. So make sure you get a good faith estimate, and these are the fees you really want to look out for. Also, any junk fees. If there are any additional fees other than what we're talking about, ask your lender. Ask your lender to describe them to you. What are they? Who actually makes that money? Now, title company fees, and this is what the title company charges. And first of all, you're going to have title insurance. Title insurance ensures that there are no liens or encumbrances on the property. So once you buy a property, if a lien were to show up, tax lien, mechanic lien, mortgage, any type of lien, title insurance would cover that lien, so you wouldn't have to worry about that. Now, when you go to a closing, typically the closing fee is $375, and this fee can vary a little bit from title company to title company. Recording fees can also vary. In this case, we have put down fees of $140. Now, depending on the county you're in, that's going to vary. Also, whether you're in a condominium, planned unit development, there are some other riders that may be attached that would be associated with recording fees. Tax certificate is $25. Now, escrows and prepaid items. If we're looking here at a purchase, so if you're purchasing a home, you're going to need to go out and find homeowners insurance, and you're going to pay that policy 1 year in advance. From that point on, we're going to escrow for property taxes and homeowners insurance. So we're going to set up an escrow account, and typically it's 2 months worth of insurance and 2 months worth of property taxes. Now, prepaid interest, this varies depending on when in the month you close. If you close the beginning of a month, you're going to pay interest through the end of the month. If you close near the end of the month, you're going to pay a day or two worth of interest. Now, a lot of people want to close at the end of the month because it's going to save them a little bit in interest, but it really doesn't matter. If you close on the first of the month, you're going to pay a full month's worth of interest, but you're not going to make a mortgage payment for 2 months. If you close the end of the month and you only have a couple of days worth of interest, you're going to have a payment roughly in 30 days. And on a refinance, the escrows are going to vary depending on when the taxes and insurance were paid last. Additional fees to take a look at are appraisal fees. They're going to run you between $350 and $450. If it's in investment properties, it's going to be slightly higher because there are different forms that are required for an investment property. Typically, a credit report is around $25, and a tax service fee of $79. So in this example, closing cost with 1% origination fee is going to be $3,967 plus any escrow accounts and prepaid interest you have to get set up. Now make sure you get a good faith estimate of closing costs up front so you know exactly what you're getting into. Also, I'd like to, if you've watched this video, make sure you mention this video and you'll receive 50% off our already low lender closing costs. Here's a couple other things to keep in mind. The seller can pay closing costs, the lender can pay closing costs, or you can have a combination of both seller and lender paid closing costs. Now keep in mind when you're making an offer and you want the seller to pay $3,000 or $4,000 in closing costs, you're going to pay slightly more for that home because the seller has a bottom line what they're looking for. So keep that in mind. When you're looking at lender paid closing costs, your interest rate is going to be higher. So we can cover all those closing costs, but your interest rate is going to be slightly higher, so we have the money to pay those costs for you. We'd like to thank you for watching this video. Please get back to the professional who referred you to this site for more information. And thanks again for watching the video.